Hello and welcome. You're tuned into Your Trades with me, Ankita Saxena. Well, this is a show where we take you through how the market shaped up. Let's take stock of how the market has shaped up in today's session. Today was also the expiry day. Tomorrow is a market close, and so this is a truncated week. But Nifty closes firmly above the 24,200 levels. We did see a dip coming in the last half an hour. In fact, from the day's highs, we actually declined 102 points. It was a cut of almost 0.4% coming in on the Nifty, but we managed to at least close above the 24,200 levels. Nifty Bank also was actually at the lowest point of the day today. Nifty Bank also declined almost, it was almost a decline of more than 200 to 300 points, 462 points coming in on Nifty Bank from the day's highs, 0.5% cut coming in on Nifty Bank. In fact, the PSU pack that has been an performer in the Nifty banking pack was also at the losing side today. It was reeling under pressure because we have seen that outperformance come in from the banks already. But also, as far as Nifty is concerned, there are two financial names that were pulling down the Nifty was Bajaj Finserv and the Bajaj Finance that reported its Q4 numbers and was a set of disappointment coming in for the street. And on the back of that, they were trading with cuts of more than 5% in trade today. IndusInd Bank was another name that was in focus today because the MD and CEO has resigned, and we did see the stock decline, but in the later half, it managed to pick up a bit and closed in the green with a marginal gain of 0.1% coming in. So Sumant Katapalya, who's the MD and CEO, have resigned from IndusInd Bank, and on the back of that, IndusInd Bank was in focus today yet again. Couple of other news that impacted the market is that Trump has eased the auto tariffs, and on the back of that, the auto pack was in focus today. On the back of that, even though auto pack had turned absolutely flat, but we also have the auto sales data that started trickling in, and that posted a rather muted set of numbers. So the Nifty auto was absolutely flat on the back of that, both news flows coming in together. We also had a couple of other names that were in focus today. Trent was another slip in the trade on the back of weak quarter coming in. So Trent was another stock that was in focus today. From the last quarter as well, Trent had seen a weak quarter in the previous quarter as well, and this quarter also Trent, right after its results, was reeling under selling pressure of almost 4%. But besides that, a couple of other news that made headline was the fact that the PM has convened meeting over security preparedness as far as the issue with Pakistan is concerned, and that is also causing a lot of trepidation in the market now because of the geopolitical tensions that is building up. But today is also Akshaya Tritiya, a good news, and what was really shining away was gold. Despite soaring to record high levels, gold did not fail to disappoint because people continue to buy gold, especially today on the auspicious occasion of Akshaya Tritiya. So that's how largely the market shaped up in today's trading session. But let's get on board Amar Singh, who's the Senior Vice President Research from Angel One, who's joining us to weigh in on how the market shaped up. Hi Amar, thank you so much for taking the time out and joining us today.
Yeah, thank you for having me on the show.
Right. Amar, tell us what are you seeing on the charts? We had the expiry today. Now, there is a trepidation in the market, as we can see, but is that on the back of sentiments? Because we also have seen the market run up now. Is this a breather that the market is taking before the next leg of run up can be seen? And what are the levels to watch out for then?
Yeah, I would say that the markets are definitely very sensitive to the news flows, be the tariffs. Earlier, it was more of a tariff news flows, but that's the markets have more or less mellowed down. And Trump has also, to a certain extent, pulled back on that. So markets are not that much concerned. At least I'm talking about the domestic markets. They're not that much concerned. But yes, the recent terror attack in Kashmir, that is definitely a cause of concern. And there the markets are, I would say, slightly on the cautious side. Though we are not seeing a significant, I would say, shift. So what is likely to happen is that if we look at India VIX, because that gives us a first indicator, it has moved up. There's no doubt about it. It had corrected to almost 14 levels. Currently, it's around 18. So if you look at the week so far, it's up almost more than 6%. So that is some sort of concern that, yes, there is some concern with that regard. Overall, what we need to understand is that markets have rallied significantly from the recent lows of 22,000 to currently trade around 24,000 plus 300, 300 plus. So clearly that's been a 10% more or less rally. So, and in a very short span of time. So somewhere or the other, stocks are definitely witnessing some profit booking as well. So it could be some consolidation at the current level. So if I look at the major indices, if I look at Nifty, so Nifty has the potential to rally 300, 400 points higher towards 24,700, 24,800. That's going to be the next zone of resistance for Nifty. Prior to that, somewhere around the current levels, so somewhere around 24,400 would be the first zone of resistance. If that's taken out, then we could witness a 300, 400 point rally in Nifty. And having said that, if I look at the support, so immediate support would be somewhere around the 24,000 level, with it being in favor of the bulls until and unless we witness some negative news flow. Because I've been saying for quite some time that it's right now a buy on dips strategy, but you need to be slightly cautious at the current levels because we witnessed a sharp up move.
Right, so we will be watching out for those levels. But in this market, do you have any long positions, any counters that you see value in, any buy calls coming in then?
Yeah, I would say HDFC Life is definitely one stock one can look at. Today, it has witnessed a good breakout and on significant volumes. So if I look at the stock from the last few weeks in particular, so the stock has witnessed a sharp rally. And technically, if I look at on the charts, be it the intermediate term trend, short term, as well as the long term, the stock remains strong and firm. So this is one stock one can look at buying at the current levels towards 740 odd levels, with a stop loss of 713 and a target of 778 on the upside. And the next stock to look at is from the pharma space, and that is Sun Pharma. What we're seeing is that Sun Pharma did consolidate for quite some time between the 1600 and 1800 level. We've seen the stock trading around those levels, but managing to sustain above the 1800 levels. So currently it's around 1830. If I look at the chart, some of the technical indicators on the intermediate term, they've turned positive. So that really tells me, and the long-term trend is with I would say not very positive, but yes, it's positive with somewhat of a lesser bias. So what it means is that we could witness a rally in this stock as well. So buying at the current levels for a target of 1925 on the upside with a stop loss of 1779.
Thank you so much. HDFC Life and Sun Pharma are your buy calls with the target price of 778 and 1925 respectively. Thank you so much for joining us then. But moving on to the wise coming in from the words coming in from the wise, growth slowdown is impending in India on the back of slew of trigger tariffs, volatility and capex. That's the word coming in from JP Morgan's Chetan Iyer. Let's go across and listen to this excerpt of the chat we had with him to understand his rationale.
India is doing well on a relative basis, but look, on an absolute basis, everybody is going to take some pain. And so, as I mentioned, for India, we are building in a 50 basis points growth slowdown from 6.2 on a quarterly trajectory to 5.7 over the 4-quarter period. So that is going to be still, something that cannot be avoided, because India is still sitting in this world, connected with the rest of the world. The part that is good in India is that there is a structurally higher dependent on domestic demand versus external demand. And at the same time, there was a bit of a blip in the government spending because of elections last year. That has come back. So the support from government spending is going to be quite critical in this environment. And so hopefully we don't see a compromise on those target numbers that were laid out in the budget on capital expenditure. But so I think, yeah, India's domestic demand dependence is high, and that is on a structurally higher path. So that's going to be an offset.
All right. So that was the word coming from Chetan Iyer from Morgan Stanley. But moving on to how the derivative diary is shaping up for the 8th of May expiry, let's take a look. Well, we do see a Nifty flat call coming in on Nifty, and for Nifty Bank, there's a long unwinding happening, which shows a slight bearish underlying trend, and we could see that today also with Nifty Bank reeling under pressure. But let's take a look at the call writing levels first. The first level to watch out for is 24,400 and the second call writing is happening on 24,500 level. As far as the active puts are concerned, the first put writing is happening on 24,200 and the second put writing level is 24,100 with no resistance or there's no support level here. So these are levels that you need to watch out for as far as the derivative diaries is concerned for 8th of May expiry. But moving on from there to the next story where Tamal Bandyopadhyay, who's the author and senior journalist, is sharing his view on IndusInd Bank's accounting discrepancies. He emphasizes that this incident has raised concerns and questions on bank's corporate governance. IndusInd Bank was in focus today on the back of the resignation that we saw coming in from the MD and CEO. But let's go across and listen into what Mr. Bandyopadhyay had to say about it.
It's not a huge dent to the bank. That bank will collapse, and neither for the depositors. I can't talk on behalf of the investors, but certainly as at this kind of thing, it's not a, the bank will go down under. It's that is not the question at all. In fact, Reserve Bank of India governor called it an episode. So I would agree with that. This is an episode, very unfortunate episode. It's not a systemic risk, neither it's a risk for the bank. People's money are safe. Investors, they have their own calculation how to come back to this or buying the stocks again. That's a separate, or staying put. That's a separate story. It will not have a huge dent on the bank balance sheet or profitability in future, provided the other businesses are fine. But it raises a very critical question about corporate governance.
Staying with IndusInd Bank, then IndusInd Bank has suffered, but they don't doubt its future. That's the word coming in from Ashwin Parik, who's a managing partner of Ashwin Parik Advisory Services. Let's go across and listen in to what he has to say about the entire IndusInd Bank saga.
As far as the bank is concerned, it's a very stable bank. A bank with a very good balance sheet. So, we recognize, of course, that 1,960 crores or 1,970 crores, as the case may be, may have to be now provided for, and they've already, there is a mention that they'll provide it all in this quarter itself, which means the annual accounts will look very different. But I suppose as far as the bank is concerned, soon, they will really find the leadership and they'll reconstitute the leadership group as well. The bank is stable. The bank is very much stable.
Well, some more voices coming in on IndusInd Bank. Then let's go across and listen in to Rahul Milani, who's a research analyst, Mere Asset Share Khan, what he had to say about the profitability of IndusInd Bank going forward.
The next 2 quarters will be washout quarters because if the 2,000 crore discrepancies impact has to be taken in this quarter. Apart from that, 600 crore MFI book discrepancies have to be taken. So forget about quarter 4 profitability, and even if the interim CEO is appointed, there will be some of the other legacy cleanup or other things. So I'm not currently betting on the from the earnings perspective, but from a change in guard perspective. And rather than, but because it is very difficult, it is a very challenging time because it is very difficult to pencil in any earning estimates at this point of time. So rather than investors should think to play through this event, because till the time external CEO or private banker is appointed, the stock would have already been priced in.
All right, moving on then from IndusInd Bank to Earnings Corner. After posting an operationally good quarter 4 earnings set, we caught up with Kumar Subaya, who's the CFO of CET, who says that they will continue to focus on international business, and he hopes that to see the export contribution rise for the next 2 years. That stock was on firing on all cylinders today, trading with gains of upwards of 8.5% on the back of those strong set of quarter 4 numbers. But let's go across and listen in to the CFO.
We continue to focus on international business, okay, and as we had communicated in the past, our share of exports business on our revenues currently hovering around 20%. Our endeavor is to take it to 25% in a 2-year kind of a time frame. In the year that went by, in FY25, international business grew by about 8.5%. Okay, going into the current year, we do see double-digit kind of a growth. Overall, CET grew in double digits in full year, and also in Q4 we grew by about 14%. We would like to see some momentum in the international business from the current quarter. We had some challenges in the previous financial year with respect to availability of vessels, availability of containers on time. That had some impact on our revenue, but otherwise we grew strongly at 8.5%. We look forward to a double-digit growth in FY26. So we see a mid-single-digit kind of a growth possibility in the coming year. And we hope, in addition to that kind of a volume growth, we hope to get some price growth with premiumization and with some selective price increases. We hope to, see a double-digit kind of a growth going into FY26 and overall at revenue level.
All right, let's focus on a couple of names that were in focus today, like Greaves Cotton, Uno Minda, Zydus Life Sciences on the back of news flow. But let's get on board my colleague Rabinder, who's standing by with the details of why these stocks were buzzing in trade. Over to you, Rabinder.
Well, yes, Greaves Cotton is in focus. Our company has announced its Q4 number, and company reported a revenue at rupees 823 crore, which was up by 22.3% year-on-year basis. If we talk about PAT, then PAT also saw a good uptick of from 2.56 crore to 24.05 crore, and margins also saw a 200 basis point uptick year-on-year basis. So overall Q4 number of Greaves Cotton was good. Moving to next, CET were also in focus, where CET has announced its Q4 number, and the company reported a revenue at 3,422 crore as compared to 2,992 crore. If we talk about EBITDA, then EBITDA company reported a EBITDA at 388 crore, and margins company reported 11.3% as compared to 13.1% year-on-year basis. Moving to next, CG Consumer were also in focus, where Jefferies has come out with a note on CG Consumer, and they have maintained their buy rating with target price of rupees 480. They say that the risk reward looks good of CG Consumer, and they expect EPS to grow at 22% CAGR from FY24 to 27 after falling a 3% CAGR from FY20 to FY24. Moving to next, Uno Minda were also in focus, where board of the company and the JV company in their respective meeting has approved the detailed project report for the development and manufacturing of high voltage category of 4W PV and CV EV powertrain product with a total project cost of 423 crore. Apart from this, board has also approved the overall investment of 140 crore approx on the equity capital of JV company. And lastly, Zydus Life Sciences were also in focus, where company has got US FDA note for cholesterol drug, and the tablet has an annual sales of USD 5.5 million in the United States.
Those were all the stocks in focus in the back of the news flow. But moving on, let's take a look at what to expect from the April auto sales numbers. Shrishti is joining us with the details. Shrishti, another month of mixed sales in store for us?
Well, yes, that's expected to be a patchy start for the auto sales data for the start of this new fiscal, wherein not much of an expectations we are building in across the segment. Firstly, let's look out from the passenger vehicle segment. Here in the SUV as well as the CNG segment, sales growth expected to be continued, but that will be on the back of higher discounts that the companies have been offering. When it comes to the two-wheeler, then muted customer sentiment is what the industry witnessed, as well as there was some bit of an inventory correction at the dealerships. The tractor segment is getting a lot of positive sentiment. The sentiment on ground is holding up quite strongly, and a favorable base too is expected to help the growth numbers for the companies. We'll talk to you about that in a bit. And lastly, in the commercial vehicle segment, the volumes are expected to be muted. But let's get you the numbers that what we are expecting across the companies and OEMs. Firstly, within the passenger vehicle counter, from the likes of Tata Motors, Maruti as well as M&M, we are just expecting a jump of 126% for the likes of Tata as well as Maruti Suzuki. But when it comes to M&M Automotive Division, a 14% jump is what we are penciling in. Now let's put the spotlight on the commercial vehicle segment. Herein, the month-on-month data is actually expected to go down significantly, but that will be on the back of the higher base, because usually in the month of March, or because of the year end, all these sales get pushed towards that flag period. But when it comes to the April auto sales data from the likes of Eicher Motors, VECV, Tata Motors, Ashok Leyland, they're expected to post just a flattish volume when it comes to the YOY comparison. Now let's talk about the two-wheelers, because that space has been doing really well, but in the month of April the consumer sentiment was not holding up that well, while of course when it comes to the earnings, some of the companies like TVS Motors are hopeful that in the month of May and June the sales are expected to pick up on the back of the marriage season as well as the festive season sales around. But for now, for the month of April, not any firework is expected in this segment indeed. But lastly, from the tractor division, the on-ground sentiment is holding up quite very well. When it comes to Escorts, a 4% jump on a YY basis is what we are expecting. And M&M tractors, the sales could be up 7% even in this environment. So definitely all eyes on that.
All right, moving on then, keeping with the auto sector, Jay Cullings, the Executive Vice President, Elara Capital, talks about the impact of Trump easing auto tariffs. He says that while for the short to medium term, demand and supply pressures will continue to persist for auto EMs. Let's go across and listen into his take.
From a medium-term perspective, not only for auto tariffs, but overall because of the other tariffs across sectors, you will see inflationary pressures in the US. And mind you that, a couple of months back, it was only the US that was expected to give a strong growth in terms of the guidance for many of the OEMs, whereas other regions were expected to be weak. Now, even US is expected to falter. There's no going back on slowness or slowdown in demand in the coming months because you will be still having some bit of cost pressures, supply chain pressures, disruptions in that. And the suppliers effectively will get hit more by demand slowdown than individual company tariffs, because it differs from supplier to supplier, component to component, and OEM to OEM based on their localization efforts. But as an overall, if I have to look at, definitely we are headed for much more pressures in the US market in terms of demand slowdown.
Well, moving on to the counter that was that is going to be in focus today, that is a Zomato, eternal erstwhile Zomato, that is all set to come out with its Q4 earnings, and this time around it is expected to be rather weak. My colleague Snehi is joining us with all the details of what the street is penciling in.
Well, yeah, so a weak set of Q4 numbers is what we're expecting from Zomato. On a consolidated sequential basis, revenue is seen growing at 7.8% at 5,824 crores. On the flip side, EBITDA is seen declining 37% just on a sequential basis at just 102 crores compared to 162 crores in the previous quarter. Net profit also expected to be down 29% sequentially at 42 crores compared to 59 crores QOQ. And EBITDA margins are seen declining sharply, coming in at just 1.75% compared to 3% in the previous quarter. Some expectations on the segmental front: food delivery revenue is expected to drop by almost 2% sequentially. Adjusted EBITDA as part of GOV we are seeing at 4.3%. Contribution margin of 8.6%. For Blinkit, it's expected to post an EBITDA loss of 250 crores, GMV growth of 14% sequentially, and EBITDA margin drop of 1.9%. Hyperpure expected to do well. Factors to watch out for when the numbers come out in terms of a net store addition for Blinkit. What's the outlook on food delivery, margin trajectory, order volume growth, as well as outlook on competition? All in all, weak set of numbers expected for Q4. Keep your eye out on the earnings when they come out.
All right, with that, it's a wrap on this edition of Your Trades. I'll take your leave. Thank you so much for tuning in.